Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at the DOT chart. Polkadot has been in a correction for a very long time and we want to take a look at if there is a chance for reversal, if DOT has a chance to reverse, are there any critical levels that need to hold or that could provide some support. So let's take a look at the chart. Let's go. We are currently on our website dailymarketupdate.com. Today we want to take a look at the cryptocurrency section. If you're interested in finding out more about the other sections or if you're interested in getting updates about different asset classes, make sure that you register. You can do that completely for free. There's a link in the video description that will take you to our website, and again, it's completely for free. So let's take a look at the DOT chart, Polkadot. I want to start honestly here, first of all, on the weekly chart. Then we take a look at the 4-hour, but I believe it's always good to take a look at the bigger picture first, get a look or get an idea of the bigger picture overall context. Yeah, because DOT is still sort of dancing on a very critical support level, and it's important to understand the overall context and the importance of that level. Yeah. So currently there is a bullish case that can be made still on the bigger picture, on the larger time frame. However, as you can clearly see, the DOT chart has not really performed well in this cycle. And since it started that, you could say, bear market in 2021, while there have been some reactions to the upside, they have largely not been clearly impulsive. This year looked potentially impulsive in the second half of 2023 into early 2024. But then what's happening right now is just nothing convincing, yeah. Especially the rally that happened after, I think it was September, October 2024. Nothing really substantial. So we will take a look at that on the smaller time frame. However, bigger picture wise, you can see that the $50.75 level, really on the larger time frame, is very important for not only resistance but as a signal, because a break above that wave 1 high, magenta wave 1, will be a clear signal that a larger degree third wave is indeed unfolding. The question is, where could that third wave take us? And if you follow us here for a while, then you know that for a third wave we normally assume the 161.8 Fibonacci extension as a first ideal target. But that would be the first ideal target, okay? Normally we want to see a third wave get at least there, maybe even higher. And if the price really pushes higher, but these are, first of all, long-term targets. They are more like mathematical projections until the price has finally built a structure from the lows that would support that. But overall, bigger picture, larger degree outlook, $105.76, 117, not unrealistic. But first of all, we need to get some sort of confirmation on the smaller time frame, and this is where we now need to take a look at the 4-hour chart. And what you can clearly see is that this critical $3.80 level is now broken. I think we talked about that in the last video. It's not a sustained break, not a decisive break, and it's only a level that really matters on the smaller time frame. Now, there's a case to be made that maybe a substantial low has already formed. I mean, don't ignore the importance here of that previous swing low at 380. But also because it's so close to that 356 level, this is a really important support area. And while I record this video, the market has already started to move up. This is not really looking like a clear 5-wave move up yet to me, but there is some movement from the recent lows, and we have not broken above any critical levels, however. So if you watch this video and we've already broken above 538, or you watch the video, it hasn't happened, but it might happen afterwards, then you know the importance of that level is quite high, because this is a level where probabilities will shift. At the moment, preferred interpretation is that the market will sell off once more, gets another low, probably in the region around $2.40 to $1.07. This would be the next Fibonacci extension zone that we can observe, and we need to observe if the market forms another low. This will be a critical level or area to watch. And if we can see a reaction from there, this could mark the beginning of a larger degree third wave. However, if we break above 538 earlier, that's not preferred, but probabilities are very balanced. We would assign a 45% probability rating to that scenario. Then we're likely already in a larger degree wave 1. We're already moving up. We've already bottomed, and a substantial low formed here in March. Yeah, just below the $3.80 level. But that would require further evidence. Yeah? This move is just, if you compare it to previous movements, the move up from the last low, it is just not significant. It's just insignificant compared to what happened before, okay? It doesn't really hold much significance, and therefore we want to see a break above 538 next for further confirmation that indeed a more substantial low has formed. So at the moment, confirmation is still pending, and until that's the case, we would prefer, at least see it as a more probable scenario, that one more low is forming here. Yeah? At least we should be prepared for that financially and mentally. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, make sure that you register on the website for, not only crypto updates, but tech stock updates, US stock updates, and we even cover the S&P 500. Thank you very much. Bye-bye.